Getting into a golden visa fund is easy. You wire 500,000 euro, you sign some documents, you get a glossy welcome kit. Getting your money back is the harder part. Let's explore the critical factors that dictate your exit strategy, from timelines and liquidity to the unique economic context of Portugal. Let's talk about the reality of timelines. When you read a fund deck, you often see a neat little number: 6 years, 7 years, 8 years, maybe 10 years. The impression is clear. Your money will come back at the end of that term. But here's the truth: fund timelines are written for fund managers, not for investors. A fund that calls itself a 7-year vehicle almost always has the right to extend. 2 one-year extensions are common, sometimes even longer. And those extensions are usually at the sole discretion of the fund manager, which means your 7-year fund could easily stretch to 9 or 10 years before you see your money back. Your investment choices directly impact your exit. If you choose an open-end fund, which is more liquid, you may have more accessible redemption rights. However, a closed-end fund is illiquid and generally locks in an investor for a fixed period of time. You can learn more about these differences in my video, Open-End versus Closed-End Funds. Exits are not just about fund performance. They're also about the health of the local economy. Portugal was under a dictatorship until the 1970s, and while it is considered a democracy today, the economy is still developing. They made it easy to send capital in because the government wanted the benefit of foreign capital inflows to stimulate the Portuguese economy. The Golden Visa program is a success in that regard. Participation in the Golden Visa program comes with great benefits, like tax-free gains for foreigners and a minimal time in country requirement. Also comes with great risk. Investing €500,000 into an economy that is still working some things out. Getting in is easy. Getting capital out could be a different story. Let's explore what this looks like in the context of fund investments. Fund extensions. Closed-end funds often have clauses that allow the fund to be extended multiple times. A 6-year horizon you thought you signed up for, there are provisions for it to become 10 or more. If the law changes and requires longer residency before citizenship eligibility, you may want that flexibility. But if not, you could be stuck. Illiquidity. The assets themselves in a fund are often hard to sell. A boutique hotel or a minority stake in a logistics company isn't easy to liquidate on demand. If the exit strategy is sell to a larger fund or wait for an acquisition, it's not in your control. There's no secondary market. In theory, fund units can be transferred. In practice, there's almost no functioning secondary market for Golden Visa fund subscriptions. Once you're in until the fund redeems your units. And then there's tax timing. Even if you do get your capital back, you may face distributions at awkward times. Fund value gains without corresponding distributions can create U.S. tax liability without corresponding cash for the payment of taxes. This is a topic we discuss in my video on the U.S. tax implications of a Golden Visa. Your fund could redeem at a time when the exchange rate for euro versus dollars isn't favorable. It's another complexity to consider. And if all of this complexity is more than you want to take on, consider the cultural donation route. Learn more in my video, Fund Investment versus Cultural Donation. Never assume an exit is automatic. Read the redemption clauses, check the extension rights, ask how the fund sponsor plans to create liquidity, and always ask the question: successfully exited a prior fund with this sponsor and with this manager? If the answer is no one, then you're the guinea pig. If you have the cash, getting in is easy. Getting out is the real test. Your initial investment choice between capital preservation and returns will be a big factor in your final exit. For a full education on how to identify these risks and protect your capital, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass.